Hey, good morning, Matt. My name is Stewart. I'm the CEO, chairman of Mistango River Resources. We're traded on the Canadian Venture Exchange under the symbol MIS. Market cap is about 11 million bucks. Got 7 million in cash. That means we have a $4 million enterprise value. We also have a $60 million exploration commitment from Kirkland Lake Gold, who is our neighbor on all sides. We just came out with first assay of our drill program on our Kirkland West Project, which is immediately adjacent to Kirkland Lake's Macassa mine, the highest grade gold mine in Canada. We had some VG. It was pretty deep, but it was nice high grade. We had another hole that was also VG. Assays are pending on that one. That one's much shallower. We think it's part of the same structure. I think the good news, the great news really, is that we've proven that gold on that Kirkland Lake system runs onto our property. So we're just getting started there. So we're very happy with that result, but it's early days and there's work to do. And then we're also starting this week, we're starting drilling on our Omega project, which is in the same neighborhood, a little further east, actually adjacent to Agnico Eagle and their Upper Beaver project. Soon going to be obviously, Kirkland and Agnico are going to have that merger. That's around a 600,000 ounce resource, 43101 near surface. And the drills are spinning there. So we're going to be very active in 2022 with various drill programs, and especially with Kirkland Lake, the Kirkland Lake Gold partnership behind us, and they're funding our exploration. So, there's very little risk of future dilution, especially with our current cash treasury.
Stephen, good to see you. Well, I've seen you a lot with your various ore group companies, but on Mistango, we haven't spoken since June 2020. You described this company at that time as the sexiest exploration story in Canada. And at 25 cents then, I guess it must have felt like it. You're now at 7.5 cents. What's happened?
Well, look, it's been a roller coaster ride. There's no question about it. If you go back before we were 25 cents, when we took over Mistango, we were 1 cent. Okay, so it's been 1 cent. I think we hit, even our high was in the 30 cents, and we've come back down. I think we're at our 52 or maybe even a long time low, and that's largely because our first drill program on our Kirkland West project we missed. Simple as that. That's the exploration business. A lot of expectations simply because where we were. But right beside the Macassa mine, which is Canada's, it's not promotional to say it's the highest grade gold mine in Canada, perhaps arguably in the world. It's their flagship mine, and we're right on strike. We're literally adjacent. We're neighbors. We can see the trend, which is the Cadillac fault. The main break comes right onto our property. We went out there early in 2021. We drilled because it's difficult to drill because we know it's not on surface. It's a mature camp, so there's no gold nuggets, right at your feet. You got to target at depth. The first drill program, as I said, was unsuccessful in terms of hitting gold, but it was successful in helping us vector in terms of looking for the structure and looking for the right rocks. We hit some good looking rocks in the first program, but we didn't get any gold. This time we actually deployed or employed a geophysical model and AI testing from a company called Mira Geophysics, which gave us a new model, which is actually proven to be quite reliable in hitting this structure. And this time, the structures that we hit had gold. So we're in much better shape. I think it's a reinvigorated approach now. Also, 2021 was a little slow because we had that partnership with Kirkland Lake. It takes time to move through the machines of a big company like that. So getting everything organized. But that's all behind us now. As I said, we've finished our drilling on our Kirkland West project. Assays are just starting to trickle in, and now we're starting immediately. We pulled the same drill from that project. We put it right in our Omega project. So there's going to be a lot of news flow coming out on these assays plus Omega. So it's going to be an exciting 2022.
Right, but like. Okay, there was enthusiasm when we last spoke. There's an enthusiasm now. Great, but you're in a different place now. And part of the reason I say that is because you did a deal, you mentioned it, with Kirkland Lake. I'm not sure people liked it. And you're going to tell me, well, maybe they didn't understand it, or maybe we haven't had time to, put the real deal on the table because it took a while to negotiate. So what was the deal that people didn't like? What do you think it was about that deal that they didn't like?
Well, I don't think, we can't just assume that people as a whole didn't like it. Some people didn't. Well, I can't please everybody. What I did was I made a long-term, conservative, smart deal that saw us be financed for the next 10 years without diluting ourselves. I understand very clearly the risks associated with this business. I do think, to sort of answer your first question, I do think we have one of the most exciting land packages around. There's no better place to be than in Kirkland Lake in Ontario. There's no better place to be around the Kerr Addison and around which the Omega is, and the Macassa, of course. So I think we do have that. One drill hole can change everything quickly. But this deal was about understanding that, look, and I think if you look in retrospect, we missed on the first program. I mean, I understand these risks. And if we miss, we'd probably have to go out there and finance that 7 cents where we are. But guess what? We don't. So we have Kirkland Lake paying these bills. It mitigates the risks. It took away some of the upside. But I mean, life is about trade-offs. And I understand how risky these programs can be. But we benefit from having the partnership, their expertise, their support, their stamp of approval, and of course, their money. So I think long-term, it's a good deal. I have to think long-term. This business, you cannot think short-term. You cannot live off your last drill result. You got to think about building a company. And I think that deal was a very smart deal for us to build Mistango for the long term, because it's going to take time to find an ore body. It doesn't happen overnight. So, I mean, you need to explain this to people, because I think it's important, because, okay, I can broadly say people didn't like it, investors didn't like it, the share price didn't like it, which is why do a deal like that if you're so confident about the land package? Because if I look at exploration plays, what is it? I don't know what. Not that many make it, right? Not that many make it. Not that many people survive. Companies survive. They are cash constrained. They don't have that one lucky drill result. Your view is you'd rather de-risk it, take less of the upside. That makes more sense, improves the chance of success. So some money's better than no money. Was that the mentality? And therefore the mentality, what you'd expect of investors investing in Mistango? We could have gotten lucky on that first drill program and discovered, Macassa Part 2. But I've been around long enough to know that that's not necessarily realistic. Okay. So I'm thinking about, phase 1, phase 2, phase 3, all these drill programs. I guarantee you, any junior that is going to be diluting at the top level. I mean, we diluted at the project level. Most juniors dilute at, 5 cents, 10 cents, whatever it is, continuously. So the risk of us diluting on issuing shares is significantly lower. We've got $7 million in cash, which stays fairly static, right? Because Kirkland Lake are paying our bills. So our share count is going to be, for the foreseeable future, going to remain as it is. And they are paying our bills on the ground. So, I mean, it's are you going to dilute at the asset level, or are you going to dilute at the share count level? I mean, pick your poison, but dilution is a fact of the business. And in the exploration business where we don't have any revenue. And so, what is the share split? I mean, what does that deal structure look like? How much of the upside have you given away? Future upside, I should say. They have. So over the next 9 years, they have to spend $59 million, and they would earn 75% in both projects. So when you consider we're an $11 million company, to sell 75% for let's say $60 million, which was the original commitment. I mean, I like those economics. So do I. But you got to go find some gold, or you got to try and find some gold. You put out a result recently, 86.2 grams, but over half a meter, but deep, over 920 meters down. So that kind of gives you a sense of the difficulty of finding gold down there. So what should people read into this? Is just the beginning, or what does the data tell you? It's just the beginning. They should read into the fact that we found gold. So the Kirkland Lake system is much bigger than the Macassa. The Macassa is just the 7th mine, and it's been in production for a long time, but the Kirkland Lake camp and the Kirkland Lake ore body is one cohesive ore body that's been mined for nearly 80 years. And Macassa is the furthest west that they've been mining thus far, and we are the next property west. So the idea is to expand the known mineralization or gold mineralization of this system, which is world-class by no other definition, and we have a piece of it. Okay, we don't know how big it is, but we do know that we have high grade, and we have some of it. We know we've hit it at a kilometer deep, so that's deep. We know that. We also hit it at 300 meters. Okay, we think that's the same structure that we hit. So those two holes hit the same structure. One at at nearly a kilometer, and the other at about 300 meters. So, obviously we have other holes that went into those the 700 meter delta strike length in between there. So, and it would be great if that whole system is mineralized, but we don't know that. But really what you're looking for is these gold shoots, these mineralized systems that bear gold. We're hitting good looking rocks, so structure. Okay, so we're getting into the faults, we're seeing what we want to see, but it's really tough to know if you're hitting gold. I mean, even Macassa doesn't have, necessarily regular occurrence of VG. You can't really see gold, so you got to assay it. So we're still waiting on the bulk of our assays from this program, including 2 particular holes that we're quite interested in that went into the same structure that we released those the 86 grams per ton on.
Right. So they've committed, it's down at $60 million. They're doing the drilling? Their drills?
No, we are the operators. We're the operators.
Okay.
And so we control everything. We certainly do it in partnership. We have a strategic committee where we get together on a regular basis, and we just sort of throw ideas at the wall. We look at the geophysics. We look at our models. We get their input. We come to a consensus on what we're going to do and when, and then we go at it. And we are totally in control of the operatorship of the project.
And therefore the economics around the drill bit. Okay, that's good. So what happens then? You spent $60 million. How many meters is that? I know you can go for 5 years or so, or within 5 years. But what's the expectation about how quickly you get through that?
Well, first things, I don't want to get 5 years ahead of us. I want to sort of do one step at a time. First things first is to get all this assay data back, model it, look at it, see what we've learned from this drill program, and then we're going to go back there and drill it again. I assure you, in 2022. Before we do that, of course, we're drilling on our Omega project right now. But then after that, I suspect we'll go immediately back after we've modeled everything on the KL West, and we'll look to expand upon what we've hit and what we've learned.
But that's where I want to get to, Stephen. You're throwing the Macassa mine at us, and that's a heck of a comp, right? You go, right, we're not right next door, we're on strike. If we get this right, it could be good news. So I want to understand where $60 gets you in that process, right? So how many meters, and then how long will you can go through this as quickly as you like, or there's a defined end point by which the money needs to be spent. I'm trying to go, well, if I go and look at how the Macassa mine has evolved over time, might give me a sense of how much more money will be needed, and therefore what the end result could look like for you and for Kirkland Lake. So if we're going to do peer,
sure, yeah. Well, look, if you're gonna do simple math, I mean, I think it's an unrealistic exercise to sort of extrapolate how many meters comes out of 60 million. But look, at 100 meters, $100 a meter, that's 600,000 meters, which is more meters than we would know what to do with today, right? I mean, so it's step by step. First thing is you find that ore shoot. And then when you find an ore shoot, a structure that carries gold, then you hit it, and you hit it hard. And then, you look around it. Okay. But we found a structure. It has a sniff of gold, but it doesn't have, that's not economic yet.
Correct.
So, there's work to do. But as soon as we find call it a reliable gold bearing structure, that's when we hit it with, multi-rig program, and then just define it and say, so you understand its geometry, its grade, and ultimately its economics. And that sort of thing can happen relatively quickly. And I'll note that Kirkland Lake has the ability to accelerate that. So they don't need to wait. If we find something interesting, I expect them to ramp up the spending. And in fact, they also have the ability to, in lieu of put the 60 million into the ground, they can give us $75 million in cash to earn it. So they don't have to spend it. They can just buy it out for $75 million in cash for the 75%. They have that option. And I suspect if we hit an obvious gold shoot that is, call it strategic to their operations in town, I think that I suspect they do that. I certainly would.
Yeah, but kind of like your negotiations with them, they'll work at their own pace because they got other stuff going on, right? So there's that. And for your investors, we would be looking at this and thinking, well, what's the time frame on this? Is this the best use of my disposable income to invest in this company? And there's a kind of game to be played here a little bit. You run a big group of companies, or successful group of companies that you built up from small, accretive value there, and all those things that you will say to me, and you have said to me, you've got to do the same thing here. So there's a little bit of let's do things the right way in conjunction with Kirkland, because they know what they did just further along strike or up strike from you. And there's also a bit at $10 million market cap, you got to kind of go play the market game and get those high-grade headline numbers out there to drive a little bit of excitement in the retail and get a little bit of liquidity and move that share price a bit. So it's difficult down here. You perhaps you can't play it technically because you got to worry about what the market's doing and how the market's reacting. And to that end, when you did put this result, 86.2 grams of half a meter, wasn't much of a reaction. So what more do you think you need to do?
Shrug. I mean, the market is quiet. You really have to, wow everybody in order to get some traction these days.
I'm wowed. Look, 86 grams. I'm wowed. That's great. You should right?
It's skinny and it was deep. Okay, so like as I said before, it on its own doesn't prove a mine. What it proves is that high-grade gold comes onto our property. Okay, so that's a start. I guarantee you there's more than it. It's not the only piece of gold down there. Okay, now we just got to find more of it. And so it's step by step. That's what it is. We got a good start. So Mistango is really, a hybrid company, if you will. We are, the Kirkland West Project is a speculative drill story with, a de-risk situation where we got a big guy paying our bills and we're in the shadow of a head frame and we hit high grade gold. That's the bet. Can I give you a time frame? Absolutely not. I would just be blowing smoke. Now, the other side is we've got our Omega project. Let's talk about that for a second. That's about a 600,000 ounce resource near surface, around 2 grams. That is a much more established resource. So we know we're going to hit, we know we can extend that mineralization. We've modeled it. In fact, we're going to come out with our model so people can see it in 3D, see exactly what we're targeting. We think we can take it relatively easily to 1 million ounces. That becomes awfully attractive, especially when you consider that Agnico/Kirkland and their Upper Beaver deposit is being moved forward and we're right there. I mean, that's feed for it. So the whole, let's talk about, the whole camp is being transformed with Agnico Eagle and Kirkland Lake coming together. They were the two biggest land packages. They're together. Agnico's got their Upper Beaver, Kirkland's got their Macassa, and then we're dotted all over the place between Mistango and Ore Finders. We're the next largest landowner. We have the best, non-Kirkland Lake / Agnico assets there. They are our partners. I mean, I think we're in a good position. So we offer a little bit of, let's call the Kirkland West project a bit of a Hail Mary. I mean, look, every exploration, you mentioned it, it's high risk business. You most times you fail. I understand that. I try to communicate that with shareholders, but we're in this for the big score, right? We don't take this level of risk without the potential for a big score. That's what KL West offers. And then Omega balances that out a little bit. I mean, it's, as I said, around 600,000 ounces, good grade for near surface. Put a slap a valuation on that per ounce, maybe $30 an ounce, which is sort of quite modest for a Kirkland Lake type project. That's $18 million, okay, at that valuation. If we can expand that to 1 million, then not only does the per ounce multiple go up, but obviously the quantum goes up. So $18 million asset baked within this company, which has an enterprise value of 4, with $7 million in cash. And in a really excellent jurisdiction, world-class jurisdiction with a super major as a partner. I mean, we're cheap. Why are we cheap? Because we didn't hit anything on our first drill program. I mean, it's as simple as that. I mean, that's why we had a rough 2021, is because we had high expectations, which is, par for the course. And we didn't hit anything of economic significance on that first drill program. And then people, the air went out of the bubble and people lost interest and they wrote us off. But hey, I think we're back on the KO West project, and we're certainly back with the Omega. Like, people just don't even realize what Omega is. But the truth is, I assumed control of Mistango for Omega. Right. So that was the prize. And we haven't even paid attention to it because we got distracted, because we stumbled across an opportunity to consolidate a land package west of Macassa, which was, sexy. It remains sexy. And we're going to continue to invest in that. But we are, now focusing on our Omega, because that's what we planned, and then we've got a drill in place, and we're going to expand it. It's much lower risk. It's tangible value. It's not a discovery play. It's a delineation and a growth play. So that's kind of what Mistango offers, and it's all backed by me and my group. Take that for what it's worth, but I think we're a reliable, good working group. Don't sell our shares. We keep our nose clean, and we try and do what we say we're going to do. We can't always deliver a mine, but if you bat, even 100 in this industry, you're going to go to the Hall of Fame. So, it's a tough business, but we keep our heads up. We keep, as I said, our nose clean, and we just do good work. That's how I feel about it. And then eventually we'll get rewarded, and as will our shareholders.